right, welcome to the big wall for the SONAR update today. Let's dive right into the data. So tender rejection rates have stalled out. We're still hovering right around 13.5%, just above that level. That is still a very tight freight market. Like if you think about 1 year ago where we were hovering right around 5.5% rejection rates. And again, for those of you that aren't familiar with tender rejection rates, anything between 5 and 7% is considered a relatively balanced or stable environment. Anything above 7 to 8% is a fairly tight or challenging environment from a procurement perspective. 13% is above that 10% threshold, which makes it extremely challenging for most shippers to find capacity, which leads me to my next point of why are we seeing this decline so hard, so strong? These tender rejection rates want to tell you when it's moving back towards equilibrium, how tight or unbalanced the market is. And you can see the trend line that formed back in June. We were seeing this market outside of the July 4th seasonality want to tell us that equilibrium was somewhere down here, down low, that 5 to 7% threshold that I mentioned. Well, we dropped quickly out of, about halfway through July. And one of the reasons for that, because we're in a supply side led cycle, demand has really fallen down faster than we expected, especially from a seasonality standpoint. You've heard Craig talk about this, you've heard Julie talk about this, but you see this tender volume index, which is a pure measure of tenders going from shipper to carrier. We're below where we were in April. So the fact that we have this threshold breaking, like April is a fairly slow month. July is also kind of a step back from June's elevated level of shipping, but not this much. So this is what's happening to drive those rejection rates down a little bit faster than the overall trend line would have suggested. And I think that the big reason for this is, of course, modal conversion. Craig talked about this on Monday. I wrote a chart of the week about this, looking at long haul tender volumes here. In the chart, you're looking at it's up 2% year over year, but not nearly as much as the intermodal domestic container volumes are, 8% up year over year. And you see that alligator mouth is opening here on the edge, starting to tell us that there's a divergence. And that was the trigger for me, is that we're seeing almost a mirror image of replacement. Now, this does not mean that intermodal is going to continue to replace truckload volumes and capacity throughout the rest of the year, because it's not entirely fungible with that service. Right now, we're in July, August, seasonal pressures, sense of urgency, back to school is already in. There's not a lot of other reasons outside of some late season inventory replenishments to have a lot of urgency around shipping freight. So I think that, a lot of people transitioning because there is a pretty significant cost savings going on. So looking at short haul tender volumes here, just to bring this into full perspective, short haul volumes have held up. They're up 4% compared to long haul volume, tender volumes 2%. Short haul volume continues to be strong, and this is what gives me confidence that this truckload market is not necessarily seeing an early end or an early beginning to end of this cycle. Like, we still have a fairly stable short haul volume. So these are loads moving less than 100 miles. Very strong, actually, 4% year over year growth. So, and we're not seeing that same alligator mouth type perspective from the short haul tender section. So the fact that we're still holding up on the short haul side, and it's the one that's least fungible or replaceable by the domestic intermodal container freight, is also a big telltale sign. Let's move on to spot rates and talk about the spot market. I should have probably moved to the other side so I don't have to keep twisting here. But looking at spot rates, you've got flatbed in purple, you've got refrigerated in pink, and you've got dry van in white. So we're seeing a bit of a spread start to emerge here. Now, flatbed has been going strong. AI data center build out really fueling this market at this point, keeping those rates elevated, although we have started to see a little bit of an edge lower, but this market is still extremely challenged. Refrigerated starting to separate from dry van. This was such a weird mechanism to me. That refrigerated spot rates were moving almost near in lockstep with dry van. Dry van has taken a step lower. That is, of course, the side also most exposed to intermodal demand, which is also another reason that my theory around modal shift has been causing a lot of this movement. Refrigerated is not fungible with intermodal as much, I should say, as the dry van sector is. So dry van spot rates starting to come down a little bit. Still tight, still, elevated. And I think we're in a seasonal lull here in August. To pull this back to my a bigger point, we've got refrigerated spot rates. So I just talked about how dry van rates are kind of easing. If I pulled up the dry van map, it would look largely red, a little bit of blue scattered out throughout here. Flatbed, fairly flat, a lot of neutral colors, if you will. Anything in blue on this map is actually increasing. Anything in red is decreasing. So when I talked about the RTI, the refrigerated truckload index before, you saw that flattening. Well, it's because half the country's seeing increases and half the country's seeing declines. And what's interesting to me is anytime I pull up one of these maps and I see a big regional aggregation where it's not just the entire country is in blue or red, this tells me there's something going on. And I saw this in the rejection rates earlier this week, where Midwestern regional rejection rates actually starting to really take off this week. A big spike there, and I'm now starting to see it in spot rates. So anybody operating out there in the refrigerated space, you've got the protein sections down here, you've got the grains up here, very heavily concentrated. It's a little early for us to see this, a harvest style map of spot rates and rejection rates increasing in this sector. So definitely a region to watch for anybody looking at moving refrigerated freight or anybody looking to source capacity on here.